You just put out some research a few days ago saying that interest rates are headed up towards 8%. Obviously, we've seen a big disruption over the weekend with the incident in Israel. Are we still on path for an 8% mortgage? And if so, what does that mean long term?
Yeah, there's certainly a lot of uncertainties in the short term here, and rates are coming in, as you reported earlier. But there are still lots of reasons for rates to continue their climb upward. So this might be a temporary reprieve here, but likely the path forward is still upward, if not 8%, pretty close. So it's going to continue to be a strain for potential home buyers in terms of their monthly mortgage payments.
Yeah, let's talk about exactly what that strain means. So obviously an 8% mortgage means your payment's going to be higher. Diana, with some great research. So people are paying $965 more a month on a $400,000 house than they would have 2 years ago. That's a number right there. So what does that mean in real term when it comes to the way the incomes have risen and also other inflationary impacts on the economy and the consumer? What does that mean when it comes to not only affordability, but the people even having the willingness to stretch to buy a home right now?
Yeah, it is a stretch. So the increase in mortgage payments clearly is outpacing incomes. Even though we've had some relatively strong income growth, particularly for lower income households, it's not enough to really offset the increase in those mortgage payments. So you have a lot of renters who are just sitting it out, right? They're moving to the sidelines and they're not able to afford a property. And even if they could, right, the volume of inventory is just so low that you can't find a house very easily in your price range. So it's pretty much a frozen market right now, with both buyers and sellers kind of waiting it out to see what happens next.
All right, so renters also weighing it out. Diane, I want to come back over to you. Again, we're concerned about mortgage rates hitting 8%. Is there a rate that would bring buyers back into the market? Is it simply going back down to 7%? Is there actually a magic number?
Well, actually, there's been some research done on this, and you tend to see more buyers come back in around the 6% range because they think rates are coming down. But John Burns of John Burns Real Estate Consulting, who does a lot of work with the builders, et cetera, said 5.5% was actually the magic number, that would bring people more into affordability, more into feeling better about the market, and closer at least to that 3% that we had just 2 years ago. But again, from the people I spoke with over the weekend, they just wanted it to come back down into the 6% range so that they felt that they weren't buying at the top of the mortgage market. Because as you know, home buying is an incredibly emotional process, and they just didn't want to buy at the top.
Yeah, extremely emotional. So, Chris, I want to circle back to you. Not only is it emotional, it's psychological. So you're saying, according to your research, that 8%, it's a psychological level. And historically, obviously, rates have actually been higher. But this is actually for all the millennials out there. I know it's a psychological level, but have the economics of buying a home, have they changed dramatically from 20 years ago, the last time that we saw these 8% rates?
Well, in some sense they have, right, because of the run-up in home prices as well, right? If prices hadn't had that 40% jump that you mentioned, right, the monthly mortgage payment wouldn't nearly be as large as it is today. But it's the combination of those higher prices plus just the speed of the run-up in interest rates that's really the psychological barrier that many are facing here. And we have to remember that buyers usually don't look at the total price. They're trying to understand what the monthly payment impact would be in terms of their affordability. And you have that $2,200 more monthly mortgage payment staring in the face, plus higher property taxes, plus higher insurance. It really is a barrier to buying a home at this point.